The interesting thing in this cycle is that the credibility of Bitcoin is post BlackRock is skyrocketing. The BlackRock, in particular spot ETF, but the whole broad collection of spot ETFs coming in and offering a very efficient way for TradFi to buy. I'm kind of trying to figure out if more of the sovereigns will come in, and maybe they are coming in, but I'm like looking at what has changed with this market. Obviously, we had in the last cycle, MicroStrategy coming in with corporate treasuries and institutional hedge funds coming in. And so I think this cycle, just looking at the impacts of I think the key impacts right now, MicroStrategy going on full flight on their Bitcoin acquisition. So that's really changing the structure of the market.
Today, we are joined by Willy Woo, who shares his insights into the price action and market dynamics for Bitcoin and why he's bullish in 2025. As a Bitcoin maximalist, Willy Woo affirms that Bitcoin represents 1% of the world's wealth, and after BlackRock emerged as one of the primary players with its iShares Bitcoin ETF, he knew Bitcoin was heading straight to $100,000 per coin. Thanks to BlackRock's significant influence, after a nod from the SEC earlier this year, he believes Bitcoin has crossed the threshold into permanence and would serve as the gateway to substantial institutional investments, drawing interest from sovereign wealth funds, major corporations, and even governments. Let's get right into the latest interview with Willy Woo, as he gives his outlook and price prediction for Bitcoin and where we're headed in 2025.
Another push that's happening with Bitcoin, people possibly don't understand that one, and that is what we call the global liquidity cycle. That is, in basic terms, is the cycles in which all the nation states print money. And the bottom of this bear market was when global liquidity expanded, and most of that coming out of China, not actually the US. US started following, and then we kind of was trapped under like a consolidation of global liquidity. And then it broke to all-time highs and out running away to low money printing. And that happened like 2 to 3 months ago. Bitcoin tends to lag by 2 months of that global liquidity. But that sloshing of money being printed is also 4 years, and it's superimposed on Bitcoin in the right phase as well. So you can look at all the phases in which the money printers went on fast forward. They were also the screaming bull markets. And so I think that that kind of little push from the halving, because it's the resonance, it doesn't need to be a big push, and the global liquidity is going to be there. I think we're stuck in these cycles. Maybe it doesn't draw down as much because the machine is bigger. It's holding a lot more capital than last time. But yeah, I think we'll still have 40 cycles, but they'll be less intense because the amount of liquidity in the system, like as in people wanting to buy Bitcoin even when it's coming down. I think of us as still in this sort of reaccumulation phase of the market. You kind of get the bottom of the bear, you do this sort of burst upwards to confirm you're out of the bear market, and then it sort of chops around sideways as people reaccumulate coins, and then eventually it's full-blown bull market, and then you get the top and the first of the bear, right? These are the phases I think of. We're still in reaccumulation phase, that's without a doubt. And in that phase is anything can happen. It can chop around wildly. We break all-time highs. Went from 70 now to almost 100 in no time flat. Consolidating underneath that by the looks. The whole thing could come back down to 70. All sorts of things can happen in the zone. Remember last cycle, it was like, whoa, we got past 10,000, everyone's feeling bullish, and we dropped down to 4 very quickly, came back to 10, spent a lot of time at 10 before it sort of coiled up enough to really make its run. In my opinion, relatively safe to buy in this phase of the market and reaccumulation because it hasn't made its run. And I have a risk signal that we use internally for our hedge fund, but it's really measuring how much capital is flowing into the network, and then estimating liquidity conditions of the market. Profit taking happening is early signs that might be happening right now. So, time frame I'm talking about is over the next 6 weeks to next couple of months. If that starts to consolidate, whilst the our risk signal is saying it's not going to come down too much, then it's a great time to sort of accumulate more under the 100,000 resistance. But yeah, the cycle is far from overheated.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Willy Woo asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. He highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
The interesting thing in this cycle is that the credibility of Bitcoin is post BlackRock is skyrocketing, and so we're starting to see banks come in and offer financing on your Bitcoin. Mortgage your Bitcoin, get some cash. Your Bitcoin's climbing at 20 to 80% annualized. Your interest rate might be 6% if you're tapping into TradFi loans. And so you get into an interesting situation where, even these yield products now, because they are actually shares and hedge funds, I believe by the next cycle will be acknowledged by banks as collateral, just like you can front your MicroStrategy shares or your Apple shares at a brokerage and borrow US dollars. I think both the Bitcoins and shares in these types of funds can be a way of getting a Bitcoin mortgage. Initially, maybe earlier in the cycle, I was thinking, look, you can buy an ETF or you can buy MicroStrategy, and an ETF is going to charge you maybe 20 basis points or something like that per year, 0.2% to hold it. So you work that over a 20-year hold. A fair percentage of your Bitcoins are going to be lost to management fees. Whereas you could buy MicroStrategy, and with a long-term hold, it's still got a profitable business, though that's a very small part of the AUM now. And they're going to stack sats. Number two, they're in a situation where they can get almost next to free borrowings to buy Bitcoin. And now they've got this at the market offering where, this new mechanism where as long as it's selling at a premium, they can buy more Bitcoin and, issue stock, dilute the stock base, and effectively, as everyone knows, use that cash to buy Bitcoin. And that has a interesting impact because the amount of, as you're trading at a premium, it means there's a lower amount of Bitcoin per share than ideal. And as they issue more stock and use that cash to buy more Bitcoins, it's anti-dilutive, and the concentration of Bitcoin per share increases. And so it's kind of, it sounds a bit Rube Goldbergish as a machine, but if you look at the underlying of it, like the mechanisms, it's just opened up this completely huge gateway for fiat investors to convert into Bitcoin through this machine that concentrates more and more Bitcoins per share over time. And so I think that's the second reason why it's getting an increasing premium. And you look at that premium, it went from under 1 at the bottom of the bear to now consistently touching around 3, and it's a straight line up. So looking at that type of impact, and you can see also, I'm looking at just how heavily hit the altcoin space has been with so much capital coming into Bitcoin, not necessarily rotating into altcoins, and just how absent retail has been in this cycle. I mean, it looks like they're just starting to come in the last 4 or so weeks, but it's been a ghost town. So yeah, just very interesting to see how much of each, the structure of each cycle is changing, and probably the hidden side is I'm kind of trying to figure out if more of the sovereigns will come in, and maybe they are coming in, but quietly.
Willy Woo challenges the conventional macroeconomic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures, which are selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Willy Woo also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions, as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future.